Blind, where we give our first look at the currency's technical pattern before revealing the fundamental reason to buy or a particular currency pair. At the Money Map, Todd Gordon of Aspen Trading. Todd, before revealing what you're looking at, what key technical pattern do you see and why is it important?
Okay, guys, today we're going to look at the channel break, okay? I kind of call it in honor of Andy's Sweden and Norway and Scandinavian trade. This is the ski jump pattern, I call it. See, we start at the top of the 90-meter jump, gain the speed, and then all of a sudden they launch off the ramp. So how do you make a trade based on this? Well, you can see the market, this particular market is broken resistance. So obviously this is the first step you're going to take when we begin trading a market counter trend, or contra trend, I should say. Usually we say trade with the trend, but after you break key technical resistance like this, it's okay to fight the trend. So we got to take it from this particular daily chart. Let's go down to the intraday charts, assign some levels, and show you how to start picking the bottom of this market. So that blue line was the broken channel resistance. Okay, now we're going to wait for the market to pull back to this level. And I always like to have more than one reason, technically speaking, to get into a trade. So what you like to do is match up resistance with Fibonacci retracement levels, and that's what we're looking at here. The first level you're looking at is a 38% retracement. Below that is the 61% retracement. So what I'd like to do is hopefully get a pullback in this monster breakout in this particular market to get long. You guys have any idea, and are you ready to know what chart this is?
We're ready.
Okay, do you guys have any idea?
Let her rip.
All right. This is EUR/Swiss. All right. Okay, this guy has been just, I mean, this has just been, I talking to a couple of my buddies out in the, talking to a couple of buddies at my fund. They're saying people are being carried out on stretchers trying to short this. So I would say stay with the trend on this one. We're buying a pullback to 2075. Down at 1970, get into it in pieces, stops below 119.00. I think obviously we talked about euro hiking rates, but it's interesting in Switzerland we just missed PMI. It was much lower than expected. The strong Swiss franc is starting to choke off the industrial sector. And also, you know what? I think the strong Swiss franc is also shielding Switzerland a little bit from the inflation, from importing oil. So I think the S&P might be on hold. So you have two sides of this trade.
Hey, Todd, I just want to give you props from last week. You know, when I was telling people to short euros and you were saying, yeah, it would work, except 1250 has to break for the S&P, you were dead on that. So that was a great call.
Andy, wow, I don't really know what to say. Thank you very much.
But, so how does that fit into what you're doing with Euro-Swiss? Because that's a risk-on trade.
It's really good. And I overlay the S&P over Euro-Swiss, and unfortunately, Euro-Dollar's trading with the S&P. Euro-Swiss is just short squeezing everyone. So you can trade this on its own merit. But thank you, Andy.
All right.
Want to learn more about currencies? Go to Currency Class. It's our web-only segment that will answer your emails and also give you currency strategies for the week ahead. And for that, go to moneyanmotion.cnbc.com shortly after the show. Up next, the final word from the Currency Pits.